Hey everyone, welcome back to Corporate Decoder. Today, BrightSpring Health Services Incorporated just filed a material agreement about a stock offering, and I am seeing a key detail that impacts shareholders. Quick note, this is not financial advice, just my take on public filings for educational purposes. BrightSpring is selling a significant chunk of its stock, and understanding the terms will tell us a lot about where they're heading. Alright, let's dive into this Form 8K filing from BrightSpring Health Services Incorporated. This report essentially tells us about big events happening in a company that the public needs to know about. The earliest event reported here happened on the 3rd of June 2026. This filing is for BrightSpring Health Services Incorporated. You might know them by their stock tickers BTSG for their common stock and BTSG for their tangible equity units. They are a big player in healthcare services. We've seen a lot of positive news about them lately, with strong earnings beats in the first quarter of 2026. Driven by what they're calling operational efficiencies. Institutional investors like Voya Investment Management and BlackRock are also holding significant stakes, showing confidence from the big players. Now, let's look at what they have registered to be traded on exchanges. They have their common stock trading under the symbol BTSG on the Nasdaq stock market LLC. This is the basic stock most people think of when they hear a company's name. They also have these interesting 6.75% tangible equity units, trading as BTSG, also on Nasdaq. These are a bit more complex, often having a fixed maturity date and a payout tied to the company's performance or a specific asset. It shows they are creative in how they raise capital. The main event here, under item 1.01, is about entering into a really important agreement. So on the 3rd of June 2026, BrightSpring Health Services Incorporated made a deal with a group of sellers, including KKR Phoenix Aggregator and some of their own management, plus an underwriter named Goldman Sachs and Company LLC. This deal is for a big stock offering. They are selling almost 15 million shares of their common stock. The price set for these shares in this offering is $58.75 per S-share. This whole transaction, including the stock sale and a repurchase, I'll tell you about in a moment, was finalized on the 5th of June 2026. Here is a really important point. All those nearly 15 million shares that were sold by the existing shareholders, the selling stockholders. This means BrightSpring Health Services Incorporated itself did not get any money from this sale of shares. The only money the company got was from its own management team cashing in some stock options, which is pretty standard when big stock sales happen. Now, this is interesting. Even though the company didn't get money from the sale, they actually bought back over 1 million shares of their own stock from the underwriter as part of this whole deal. This is called a share repurchase. And get this, Goldman Sachs, the underwriter, didn't charge any fees for these specific shares that BrightSpring bought back. This whole selling effort was made possible by a pre-filed registration statement, basically permission from the SEC to sell these shares. They had filed this way back in June of 2025, and then they added the specific details about this offering on the 3rd of June and finalized it on the 5th of June of 26. Like most big deals like this, the underwriting agreement is packed with standard promises and agreements between all parties. These cover things like making sure all the information is accurate, what happens if something goes wrong, and who is responsible for what, especially regarding the laws for selling securities. This part is just saying that the description they gave is a summary, and the actual full agreement is filed as an exhibit, which is Exhibit 1.1 to this report. Now let's quickly look at the exhibits, which are the actual documents that back up the report. This is the main event, the underwriting agreement itself, between BrightSpring Health Services Incorporated, the sellers, and Goldman Sachs. There is also a legal opinion from a law firm, Barnes & Thornburg LLP. This is common for big financial transactions to ensure everything is legally sound, and linked to that legal opinion is the law firm's consent to be named. Finally, there is the interactive data file for the cover page, which is standard for SEC filings now, making the information machine readable. And as always, we have the signatures. This confirms it is from BrightSpring Health Services Incorporated. The report is signed on the 5th of June 2026, signed by Jennifer Phipps. Jennifer Phipps, who is the Executive Vice President and Chief Financial Officer. Her signature here indicates the company's official approval of this filing. So, what does this all mean for BrightSpring Health Services Incorporated? The company itself is not raising new capital directly from this massive stock sale. Instead, existing shareholders are cashing out. The fact that BrightSpring's management is exercising stock options and the company is buying back over 1 million shares might suggest management has confidence in the company's future value, even as other shareholders sell. They are essentially spending some of their cash to buy back stock at the offering price of $58.75 a share. which is interesting, considering their stock has been trading much higher recently, with the current price around $201.37. This repurchase seems like a strategic move to potentially offset some dilution or signal confidence at a favorable price compared to the open market. It avoids fees and uses available cash to take shares off the market, which can be a positive sign for remaining shareholders. However, the large number of shares being sold by existing holders, even with the company's repurchase, could put some pressure on the stock price in the short term due to increased supply. Yet, the strong earnings and positive operational news we've seen lately provide a solid backdrop for this maneuver. That is my take. Stay decoded. If you like this breakdown and want more insights like this, hit that like button and subscribe. The tools I use for research are linked in the description.